Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by returning guest Charles Hugh Smith of the very popular Charles Hugh Smith slash Of Two Minds Substack. Charles, welcome back. How are you?
Thank you, Robert. Appreciate the invitation.
We had a really good conversation last time. That was a fair few months ago. And for those people that listened in, that was more of just a generic conversation. It wasn't an interview. So if you're expecting an interview, Charles and I normally like to have a good open conversation. So we've got a couple of notes, but this could go anywhere. But Charles, I wanted to start off with it was a recent article that you wrote, and you mentioned in it, you mentioned about there being a very big financial Kessler effect going on at the moment. I'm just wondering if you just a deep dive into that for me, please.
Well, thank you, Robert. Yeah, it's a great analogy, I think. And so the Kessler event or syndrome is a theoretical event in low Earth orbit satellites. And the idea of the Kessler event is there's so much junk floating around up there now, disabled satellites and bits and pieces from previous collisions that the a few more collisions will create thousands of new particles, all going very fast and all having the kinetic energy of a hand grenade. Then they will hit everything in that orbit, and then everything in that orbit will go down due to gravity and clear out the orbit below it. And so then you basically wipe out all of the satellites in low Earth orbit, and the cause would be apparently trivial sized pieces of junk that are traveling at a very fast rate. And so, and this is a real issue now because, as we know, there are entrepreneurial companies like Starlink as one, but Starlink has many competitors now who are lifting thousands and eventually tens of thousands of satellites into low Earth orbit, right, to provide internet and other services. So this is a real concern. And a lot of people that study this say, well, this could really happen because there's no way to clean this junk up. And so, and the attempt that was made to kind of put a low Earth orbit trash can to start collecting this stuff was itself damaged by a piece of floating rubbish. So it's going to be very hard to deal with this problem. And of course, the consequences to satellite and internet communications would be catastrophic if you clean out the first 130 miles of low Earth orbit, right? So in the financial sector, everything is so interconnected now. And in systems speak, we say that's tightly bound. So we're seeing this already in so many ways, right? That we see that um, somebody decides to sell US treasuries and then suddenly the yields go crazy. Then suddenly people who'd leveraged that trade, now they're blowing up and then that blows up something else. And so, and we saw the sort of similar low scale Kessler effect into 2008, 2009 global financial crisis where a seemingly modest part of the global financial system, which was subprime mortgages in the United States, um, that blew up. And then it set off multiple chains of dominoes that almost took down the entire system. So I think that was kind of a mini Kessler effect. And the Federal Reserve and other central banks were able to kind of bail us out by basically backstopping 16 to 32 trillion dollars. I mean, like the size of the whole US economy as a backstop. And so now so the question is that vulnerability still here? And my article was arguing that yes, it's even more of an issue. We're even more deeply interconnected and there's more leverage. And in other words, more space junk floating around. And I don't think we can backstop it to the same degree. It would probably maybe it would take 50 trillion. And then that in itself would become a Kessler event. Once you start trying to bail stuff out, then you create consequences from those consequences. So there's second order effects here too. So that was what I was trying to describe or discuss. And I'm interested in what your reaction to that when you read that piece about the financial Kessler event, what you thought based on your knowledge and observations.
Well, it's a good question, Charles, because I read through it and I had to sit back a second because I hadn't quite thought about putting all those dots together. And yeah, and obviously there's a lot to think about and a lot to write about and a lot to talk about, but I hadn't actually quite thought about that. And I think you're right. The analogy of dominoes, I think, is quite pertinent to this conversation because we saw that back in 2008, 2009, and a lot of people out there will say that when it blows up properly this time it could be absolute carnage. And look, I don't like to be, I don't take pride out of being a doomsdayer. I like to prepare and all that sort of stuff. But if we look at the cold hard numbers and you look at, what's going on, what are the odds of it being not apocalyptic, but very bad? I would say the odds of that are quite high. So yeah, I think that Kessler event is more than likely going to be much bigger than it was, as you say, back in 2008, 2009. I don't know what any other way out would be at this stage, to be fair. If you do more QE and you print more, etc., etc., you just adding more fuel to the fire. But I don't know what any other way out would be for, again, a lot of central banks and so forth, and people around the world.
Yeah, exactly. And so you could talk about can we control that event? Can we somehow get rid of some of the leverage, that's the equivalent of the floating space junk? Could we sort of uh, pull that out and have that burn up without destroying the whole system? And I think a lot of people are hoping that or trying to think that through. Like, okay, could we just deleverage, right? Pay down some debt, let some
Mhm,
stuff default, and that's the way that we would clear the system in the good old days, right? Like in the traditional idea of a credit cycle.
mhm,
Then people borrow too much, they overextend themselves, they put the money in risky ventures that don't work out. And so then there's got to be a clearing of that bad debt, right? Debt that can't be paid has to be defaulted. Somebody has to take the losses, right? Whether it's distributed to the taxpayer or to the banks or the lenders, whomever, somebody's got to take the loss. And then once you've kind of cleared the action, cleared the deck, then you can start rebuilding and start issuing new credit. But we're in this idea now, I think, where there's doesn't seem to be any way to reduce the expansion of credit, because if we do that, then consumption falls and we get a recession. And then in the normal context, that's some kind of terrible event. Like that's like catastrophic to even have a recession. And that's really strange because of course that's part of the cycle of credit in the business cycle is to have a recession because that's what happens when you have to reduce leverage and debt, right? Somebody has to take the losses, and then credit becomes more difficult because the lenders have to go, well, wait a minute, we've already absorbed huge losses. We can't absorb any more. So we're going to have to really buckle down and only lend to the most credit worthy
mhm.
borrowers. And that eliminates up to 80% of consumers and businesses. And so that's when your blog is called and your podcast is called the Contrarian Capitalist, and so that's the core function of capitalism, actually, is to distribute not just gains, the fun part, but to distribute the losses, right?
Mhm.
And distribute them along the lines of risk and return. And so if we're not going to allow that to happen, then we're basically just letting more and more space junk pile up is kind of the metaphor here. So how do we get out of this? And I'm not sure there is, because if there's so much leverage that it may not be possible to deleverage. And so that's the kind of open question going forward. And again, to my original point about how tightly bound things are, excuse me, we have all this leverage, which is not in one country or one asset class. It's like the everything bubble, right? We all know that it's connected to trade, it's connected to um, national, like sovereign debt, and so I think we're looking at gold and Bitcoin, and we're not going to get into that debate over between those two fan groups, okay? But we can see the action in gold looks a lot to most of us like circling of the wagons, like in other words, a fear of this Kessler event. And so I don't think it's just us talking about it. Clearly, a lot of other people are concerned about this. And of course, if the digital assets are going to be impacted or disappear or go bidless or whatever, then of course your tangible assets are still going to be here. And so, and that includes like your house and you know your precious metals and your tools and your business if you have one and your skill set, whatever you know own in terms of your skills and social networks. So all of that stuff's still going to be here. And so I that's why I kind of say, well, let's let's make sure we don't have all of our eggs in life in just the digital financial sphere because that is vulnerable to a Kessler event.
Yeah, 100%. And I think we touched on that last time because we were speaking about ways that people could protect themselves. And as I think we said last time, like, we're not independent financial advisors or anything like that. We might talk about some subjects throughout this podcast, but ultimately, you as a listener, you have to go and do your own homework, have your own understanding and make decisions that work for you. So I'll cover that now. And that being said, yes, everything's very intertwined. There's a lot of obviously major issues going on geopolitically, but all you have to do is look at history, and history will tell you that when people or sovereign nations, whomever, get into trouble, then normally some form of devaluation of currency, an issue with the monetary system, dare I use the word war. All of these things have happened before, and the playbook, again, I hate to say it, but we're here to be realistic. The playbook at the moment looks quite similar. There's a lot of junk, there's a lot of space junk out there, and I do think that that event, as we both say, is going to be a lot worse than it was about 15, 20 years ago.
Right, right. And I think we can also look at 15 years ago, then globalization was still a positive force, right? And demographics, I think, were relatively positive. And I think the case can be made that those two huge influences on the economy have reversed. In other words, we all know globalization has kind of ended its run, and there's deglobalization playing out in a lot of different ways. And that's going to, even if it's a positive thing, which I believe that you can make a very good case that it is a positive, it's still going to be disruptive. And then the demographics have, I think, become much worse because of the everything bubbles in real estate, finance, everything. It's made it harder for young people to start families and buy houses. And so there's this sort of suspended animation where entire generations are kind of trapped. They can't afford the assets that the elder generations bought on the cheap, and then they can't afford to have kids, and so then you have a demographic collapse. And this is, of course, connected to social issues too. You know, like if your society is not supporting families, then people respond to that, right? They stop having kids. And so you can look at countries like Japan and South Korea that have been held up as models of economic growth and vigor for decades. And then you see that they're in collapse socially. So when we just look at GDP, that's just one snapshot of an entire nation or even the economy. And it's not necessarily a very good measure because if people can't afford to start households, they can't afford to buy a house, they can't afford to get married and have kids, then what's so great about a rising GDP? It's almost like fake. You know, there's something phony or inauthentic about that. And so I think part of our problem is we've gotten to a point where we only focus on these metrics that are easy to measure, but they're deceptive. And then so that's corporate profits, which drive the stock market, which then drives, you know, the economy and GDP. And so all of those things can look great and be stellar. But it's like if meanwhile your society's collapsing from within. And so I think we tend not to look at that, you know, and it's partly because it's harder to measure. So like in Japan and South Korea, well, the population's shrinking because people aren't getting married and they're not having kids. And so then you go, well, that's going to have an economic impact. right? And but why? That's harder to measure. And so I think we see these same issues globally. And so it's harder to pin that those kinds of cause and effect down. But to your point about history, we see this again and again going back to like the 1620s, 1640s. There's there's many incidences where when the economy starts suffering and people's wages purchase less, the purchasing power of their labor goes down, then we see the same kind of thing. Social turmoil, crime rises, drug addiction rises, all the things that we're experiencing occur because people are responding to the fact of the matter that the life is getting harder, not easier. And I call this anti-progress.
It's a sentiment I'd agree with. It's challenging out there at the moment, and it's I think it's very easy to get into doom and gloom scenarios. Now, I appreciate in various podcasts and writings that there's a duty, I think, for people to be realistic, and if that realism is doom and gloom, then so be it. But I've always been brought up with you've got to try and find the positive. For every issue, there's a solution, etc., etc., etc. So I always like to think that no matter what's happening with the demographics, no matter what part of the world you're in, etc., that there's always going to be a way out if you go searching in the right places and don't get caught up with the whole narrative. Now, I find that sometimes challenging on the especially in the writings and on the podcast to not be doom and gloom 100% of the time. I want to be realistic because I think that's important. But at the same time, remembering, right, what's the optimist side of this? What's the not the get out clause, but where what can people do to help protect themselves, etc., etc. Because ultimately, the playbook, as we said earlier on, is relatively similar. It's not the same all the time, but there are some similarities.
Right, right. And so when we look ahead, we go, okay, what are the sort of global solutions could be, and then what are our personal options, right? And so I think globally, if we look at the facts of these countries that are losing population and marriage and birth rates are collapsing, you go, okay, what's needed there? Why is this happening? How can this be reversed? And it seems like there's some social change that has to occur. And we hear reports in small ways because most solutions are like localized, right? It starts out with somebody tries something in a city or a town or in a company, and then that works, and then other people hear about it, and then that influences others and say, "Hey, that's a possibility for us too." So where towns or cities start making life more affordable for young people, either by subsidized housing or some other mechanism that includes the free market or credit. There's lots of ways to try to boost housing that becomes affordable for young people, and then they make the the social structure of the city or the town child friendly. Like there's support for people with children, and so that's an obvious solution, if you will. It's just to change the orientation of what I call, there's this sort of structure that I use, like what we value,
Mhm.
then sets our priorities, and then that resets the incentives. And we all respond to incentives. And so if the incentives to change that, then we go back and say, well, what do we prioritize? I mean, what's really important to us? And then we go, well, that depends on what our values are. So if we look at that structure, then we start seeing like solutions arise when our values change, right? And what our priorities are. And so if a society says, you know what, we kind of got off track here. We prioritized everybody becoming rich and or focusing on money or whatever, and we lost track of the fact that people need to have affordable housing, and we need
Mm.
to encourage people and help people that are having families. And so that can start and that can work in a lot of different ways. And and of course these are big changes, but big changes do occur. And in many of our lifetimes, the 60s and 70s were both they were tumultuous decades of tremendous social and political and economic upheaval. And I often refer to the 70s as a positive story, even though it was a decade that's famous for stagflation, high inflation, high unemployment, sort of like the misery index. But beneath the surface, what was happening in the 70s is worth studying. And I often try to describe this. What happened was the industrial plant in the advanced nations like the US was old, and it was terribly polluting. I mean, like the air was unbreathable and the rivers were catching fire because there was no limit on industrial waste, right? It was like, well, all we care about is profits and the products and growth, right? So never mind that we're destroying the environment, the public space. So that value system changed, right? And then so then there was a huge investment required. Trillions of dollars in today's money had to be invested both publicly and privately to clean up the and rebuild the industrial base so it was less polluting. And this paid dividends, which are just fantastic, and they're harder to measure. But one of the engineers that had worked on this in the early 80s sent me two photos, and one photo was of a river in the Midwest of the United States, and there was it looked like a sewage. It was like a sewage river. It had a dead pig in it, and floating stuff that looked disgusting, and that was the river. Now there's kayak races in that exact same spot. Beautiful, clean water. And you go, well, you could say, well, that's because we offshored all the industry, but that's not quite true. A lot of industry is still in the US, but it just operates at a much cleaner, more efficient way. And it's more productive, right? So economically, those are the core issues. So I think you can look ahead and go, if we just change our what we value and prioritize, then we create new incentives and then people respond to that. But you got to start by changing what you value. And so that process can be quick, but it can often take a while, right? And so that's the positive thing in my view. And that's at the global level. And I think that can work everywhere, you know. In other words, I don't think it's unique to one culture, you know. And I think it's a very hopeful story, but it's realistic, as you say, because you know what? If you're going to make a big change in your economy, it's going to require trillions of dollars to be invested, and the payoff could be decades ahead. And so we're so kind of enamored of this idea that a company issues some new product and 3 months later their profit margins are up 300% and you know that kind of stuff. Like we expect like instant results, and we've sort of maybe lost track of the reality that if you're going to change your economy, it's going to take a decade and there's going to have to be sacrifices made. In other words, you can't spend all the money you make and then have trillions to invest in a new economy. You know,
Mm.
if you're going to put that money to work and the payoff's 20 years away, then you have to spend less on consumption, right? And you can't just borrow it all because we've already seen the consequences of that kind of illusion that you can just borrow as many trillions as you need. Well, that becomes a burden in and of itself. So that I think is the hopeful story. And and I like I said, the 70s is not that long ago. I mean, it is for people born in the 80s and 90s, but um, it's something that happened in the fairly recent past, and it was a tremendous success on a number of ways. And that kind of established a better life, a better quality of life, and a better economy for the next like 40 years. And so we can look for that and go, well, could we do that again? And we go, absolutely.
Yeah, I think there's a lot to unpack there. I think going back to values is important because I appreciate we've been talking, or you were talking on a geopolitical macro level, even on a personal level, it's very important. I know that my wife and myself, we've had various conversations in the last couple of months about working on values because it's a similar process. It's like once you've got your values and you know what's important, then you can work backwards from that. So if you know that, I've got a value of, I don't know, freedom. Now, of course, freedom can be financial, it could be health freedom, it could be whatever. Let's just say freedom. Well, once you've put freedom down as your value, you can then work back and go, right, what does that mean to me? How do we get there? How do we achieve that? So I just want to make that, a great point that you made on a geopolitical macro level, and also say to people that if you don't know what your values are on an individual level or with your spouse or family, I'd work on that as well. It doesn't happen overnight, but again, if you're aligned, then that can help put all your ducks in the line, so to speak.
Yeah, that's a very good point, Robert. And in my own work, I often focus on that. Like I've written a book on self-reliance, which is a way of saying if you want liberty and freedom of movement, then you're going to have to build it yourself because no
Mhm,
one's going to give it to you, right? And so self-reliance is, I think, a good term. It's not trying to be independent of everything or live, in a shack in the woods. It's understanding we're dependent on other people and industry, but to gain control of your life basically and reduce your exposure to risks that you don't control, right? So I think you're right about values and how it can affect each of us individually. But again, there's always sacrifice involved because when you look at the economy from the point of view of being a worker, I think
mhm,
what my observation is, um, there's sort of like machinery set up, institutions, agencies, corporations, and they function and they need people to do XYZ within that structure. Now, if you fit in that structure, great, you're golden, right? And you can be productive and happy, great. Other many of us don't fit in those structures, right? We don't want to sit in a classroom. We don't want another credential, and we want to be independent. And so there are industries and sectors that allow for that, but it takes a huge amount of sacrifice to
mhm,
establish yourself as an individual entrepreneur. And uh, as an example, I'll just mention one of our colleagues, another podcaster I know, Adam Taggart. Um, he posted a photo of himself sitting alone at a desk, and he said, "Here's the staff meeting of the
mhm,
marketing, accounting, legal." It's like that's right. If you're going to strike out and establish yourself kind of on the margins of this society, or you're going to it doesn't work for you to be in one of those kind of institutionalized slots, then you're going to have to prepare yourself to be poor, while you
mhm.
build your business up. And you're going to have to realize you're going to have to acquire a broad range of skills. But I think that sacrifice is worth it personally. The more skills you have in people skills, computer skills, marketing, production skills, I mean, all those skills are going to pay off for you in the future, no matter what you choose to do. So that's my hopeful story is learn as much as you can, keep on top of your skills, and if you have a goal of personal liberty, realize it's going to be a slog because that's not the way the system is set up. The system is set up to, and it's understandable. I mean, if I have my business and I want people to work for me, I want them to show up on time. I want them to do the work that I need done in order to
Mhm.
not go bankrupt. So, um, I'm not saying that it's wrong to have a structure. I'm simply saying that the more skills you have, the more broader your experience and your willingness to learn, then you're going to be providing more value for whoever you work with, whether you work as an employee or whether as a colleague or a subcontractor or whatever ecosystem you're going to work in, you're going to be able to create more value for yourself and for everybody you work with. So that's my kind of hopeful story for the individual.
And I think that raises a lot of good points there, Charles, as well, because I know that it's trying to find that balance, I think, as well. And last time we spoke, I don't know whether we said it on the podcast or off air. I was based in the UK. Now I'm based in Mexico City. So I've made a big change in my life. And yes, the main reason for that is my wife is Mexican. So we had conversations about where were we at the time, who's got what work and what's going on in the background, what skills do we have, what's happening in the respective countries at the moment, the United Kingdom and Mexico. And we made a decision after a lot of conversations and a lot of sleeping on it as I like to do, that going to Mexico for myself was the better option, because not just because of potential geopolitical challenges that might be on the continent of Europe. Also, to have time together, very important, of course, as a married couple. Secondly and thirdly, whatever number I'm on, is to reduce the cost of living, to experience a different culture, experience different language, experience a different food, et cetera, et cetera. Now, Mexico, we're probably not going to be staying in Mexico for the rest of our lives because, my wife's in the same situation I am. She's Mexican, she loves her country, but she knows that the world's a big place. She wants to get out and about as well. But for now, for the foreseeable future, that's the change that, we've made. And from a personal point of view, what I've found is that there are some aspects of this culture that are fantastic. It's quite decentralized. Cash is king here. You go around, if you're going to buy stuff, more 9 times out of 10, you need a bit of cash in your pocket and you'll be absolutely fine. You're not being monitored 24 hours a day by all these CCTV cameras. That's obviously got pros and cons. And it's just little things like that. And I think I feel freer here, but also living expenses have dramatically decreased as well. So going back to your point on self-reliance and becoming free, I've been able to, through marriage, admittedly, and I will point out, I do love my wife 100%. Now, I always like to point that out. I've been able to get a temporary residency in Mexico, which I'm hoping to make permanent later on in the year. That's a lot easier because that's through a family unit rather than just doing it on an economic basis. So in effect, my plan B is in place, but my wife and I also need a plan B for her, which will be a plan C for myself. And as you said, it's not given to you on a plate. You've got to go and research it. You've got to go and make the effort as well. I know a lot of people that don't like the idea of even visiting another country, let alone moving to another country. So by actually going out and doing it and making yourself uncomfortable, if you know that your freedom or your value is freedom or liberty, as we've been speaking about, then you've got to take these steps to get there. But that only works if you know what your value is. So I just wanted to put a bit of a personal touch on that as well. But yeah, values are very important, and hopefully that personal experience might inspire people that are listening to this.
Absolutely. That's a very big change, Robert. And of course, you were able to keep your profession the same, but sometimes it's you have to change professions as well. And then, of course, that's another level of challenge. But I think what we're really talking about is adaptability. And of
Mm.
course, that's the core of being alive. All organisms have to be able to adapt to new environments. And of course, we all want to keep what's comfortable and convenient, but that's a trade-off too, as you say. There is no perfect solution. And hence, there's lots of articles online about some American that wants to move to Italy or France or Spain and find nirvana. And then they're shocked that, it's normal life and things aren't perfect. And so, yeah, we have to be realistic. There's everything's a trade-off. So, but if the trade-off's working to what you value, then it's all good.
Yeah, it really is. If you're going to take one lesson away from this, it's work again. Go back and work on those values. Charles, it's pointed to you wrote an article a little while ago, and I'll link this in the show notes that come with this podcast or on YouTube if you're watching it on YouTube. It was called A Decade of Headwinds, and you were number one, it's a very good article, and you wrote about 8 headwinds that are potentially going to shape, the next few decades. You don't have to go through all 8. I mean, there's a couple in there that I think are really poignant. But by all means, can you go in a bit more into that? What inspired that article, and then a couple of the biggest headwinds that we're facing at the moment?
Well, yeah, thank you, Robert. And again, I like your reference back to history that, human progress is always eternal, right? Like we're always changing and new technologies arise, but we're still have wetware 1.0 is what I call it. You know, human emotions and human nature are still pretty much the same as they were 100,000 years ago. So when we look at history and we see these periods of uh, whether we want to call it social or economic disruption or however we want to describe it, they tend to be polycrises. You know, in other words, if we go back to the fall of Rome, we now use this term polycrisis because it was like, well, there was climate change. You know, the rainfall was declining, so the crop yield was less, so there was less to eat. So then diseases were more prevalent, and then there was some invasions from other, you know, tribes and so on and so forth. And so dealing with one issue, most cultures and households can deal with one or two. But when you get hit with three or four or five, that's when things fall apart. And to your point, then plan B fails, then you've got to have plan C because and so if we're in that kind of situation where there's a lot of tumultuous change from various sources, then it's going to be a lot harder to navigate as opposed to like one problem,
Hmm.
right? So that's why I was thinking that these headwinds are like multi-year or possibly even multi-decade. So of course, one is deglobalization and the relationship between China and the US, right? And that each side feels that this is a battle, a trade battle or whatever, battle for global influence that they can't afford to lose. And of course, this makes it tricky because there are two possibilities. One is there's coexistence, sort of like the way the US and the Soviet Union coexisted for decades, right? And jockeyed for influence or whatever. And so there's that possibility. Or there is the possibility that one side becomes dominant and the other side loses ground. There's history of that too. So that's going to affect the whole world because these are the two behemoths, you know, in terms of regional and global influence. So and that plays out throughout the world, right? Everybody's facing the same thing. Do we allow mercantilist economies to export all of their surplus to us? And then that if that destroys our domestic industries, or are we going to protect our domestic industries as a form of national security? So I think that issue is not something that's going to go away in 3 months or even 3 years. I think that's a headwind. Like it, you know, however whatever our opinion is, that's still going to be something that's playing out, and it's a big force, right? And then we mentioned demographics, and I think we also have to talk about inflation and deflation. That you know what China did over the last 25 years that maybe fewer people appreciate is they were a massive deflationary force in the global economy, right? They came in with a huge labor force that was low wage and highly productive, and so they created a deflationary wave both in products and also in credit because they issued an enormous amount of credit and they basically bailed out the global economy in 2008 2009. The Fed backstopped the collapse, but then the Chinese economy created a huge amount of credit that helped the global economy recover. So my point being that deflationary phase is over. Now inflation is an issue within China, and they're struggling with their own inflationary forces, and so there isn't going to be any like equivalent deflationary force.
Hmm.
So if things are going to get cheaper, it means that it's not because of some globalization or financialization. It's going to be because things fall in value. In other words, houses lose value. That's how you get lower prices. There isn't going to be some kind of miracle from outside. And of course, that's a two-edged sword, right? Because if you're going to say, well, housing needs to become more affordable by falling 30 or 40%, then the people who, you know, counted on that wealth are going to, you know, suffer a loss. But then the upside is people that were priced out can now afford it. So my point there being, I don't see how we're going to be able to have an asset bubble that never pops, that just continues expanding wealth. Um, that history doesn't say that's likely. It's there's always going to be a retracement, and it tends to go back to the trend lines, right, of whatever growth was before the bubble. And there is an upside to a deflation of an asset bubble because then things become more affordable. So I think that what we call the reverse wealth effect is going to be a factor, and that of course is the wealth effect is like, well, when your assets go up in value, even though you haven't sold them yet, you look at your account or your house value and you go, wow, I'm richer. Then you borrow and spend more money, and then the reverse wealth effect is, I feel poorer. Well, I don't think I'm going to take that vacation. I
Mhm.
don't feel like I can afford it. And so I think that's going to be a headwind going forward too. And so I think those issues are going to play out over time. And there's no real guarantees, to predict that. We can only predict there'll be a resolution of some kind, but we're not sure what shape that resolution is going to be going to take. So
Yeah,
I'm
it's
just looking at my list here. Um, And I'd already mentioned two other two other headwinds, which is there's no save. There isn't going to be anybody. The Fed can't um, print another couple of trillion and give it away or boost the assets because they have to worry about inflation now too. And sovereign governments can't print trillions and give it away to keep the economy going because they're all heavily indebted. And this is not just the US, it's also many other countries, including China. There's a lot of debt in China as well. So um, the solutions that worked over the last 15 years are no longer in hand. That's really what I'm saying. And so we're going to have to find other solutions. And these traditional solutions, like a recession that
Mhm.
clears out unpayable debt and bad investments that aren't going to pay off, that's now verboten somehow. We become sort of fragile that we can't bear the thought that there's going to be a downturn and a decline in assets, but that's the normal course of things if you look back in history.
I'll put a link to the article again. I'll put a link in the show notes. I thoroughly enjoy reading it. And again, there were eight headwinds there that I looked at and I took some time to think about. And again, I agree. I agree with what you say. In terms of the Fed saving the US or whatever, I think depending on who you speak to and so forth, there's two camps. There seems to be two camps for everything at the moment. You've got a camp of people saying, well, for various reasons, the Fed isn't going to ride into the rescue. And then you've got people on the other side that will say, well, it's happened before, it's probably going to happen again. And then it could be almost like a last hurrah in terms of everything you've been speaking about inflation. And then what happens after that? Well, will there be some form of monetary reset, the Mar-a-Lago Accords, whatever it might be? Um, who knows, really, moving forward. So yeah, it's interesting on the Fed. I do see a lot of people that say that yeah, they'll ride into the rescue, and then people like yourself that say, well, hang on a minute, not sure that's going to happen. So always nice to get both sides of the coin there.
Right, right. And one thing I tend to think about is we all know that the wealthy class, the 10% globally, have most of the political power,
Hmm.
right? Because nowadays you buy political power. So if you're extremely wealthy, then buying political power is sort of change. It's not that much money compared to how much you have. And so I think if we ask ourselves, what will work for the wealthy in the world? And then that's probably what's most likely to happen. Now, we can have a French where the current nobility is overthrown and so on,
Hmm.
and that's always a possibility. But more than likely, the solution will have to work for the wealthy as well. And so, let's say that they accept the fact they're going to lose something because the reset it's going to require some kind of sacrifice or trade-off. So it's more like what they don't want to see is the system to collapse. I think we can probably agree on that, right? Because collapse wipes out everybody. It doesn't just wipe out the poor because they don't have that much to begin with.
Mhm.
It's like who gets wiped out in a financial collapse is the wealthy, you know, right? And so and we have examples of that in the recent past. I mean, the dot-com bubble in 2000, it fell basically 80%. Now, for those people who didn't have enough money to even have any stocks, that was a non-event. They didn't lose anything when the dot-com bubble blew up, but people who invested everything in that and didn't sell at the top, they lost a lot. And so I think when you talk about the Fed and monetary reset, I think we have to look at it and go, whatever's perceived as the best solution at that moment to save the system from collapse is probably what's going to happen. Now, maybe that's not a good choice. We won't know until afterwards, but I think if we're going to make predictions, we can always ask, well, what's going to work for those people who own the political system and most of the wealth? They're going to want to protect their core assets. Yeah.
Yeah, I think that's a fantastic way to summarize that, to be honest. And I just want to go back and finish up on self-reliance, basically, because again, we've alluded throughout this conversation that it, you know, doom and gloom, realism, etc. That actually there's always going to be a way out. There's always ways to prepare yourself and to, sort yourself out. So, yes, if you think that there's going to be, the Fed rides into the rescue and then all hell's going to break loose financially, derivatives markets blow up, whatever it might be, then you have to look at the solutions and go, well, what could I do to protect myself? And as I said earlier, we're not independent financial advisors. Don't take any of this as financial advice. Off the top of my head, I look at it and go, well, okay, gold, silver, especially silver at the moment, given gold and silver ratios and so forth. You could look at the mining companies and not just as a short-term thing, but again, as part of a potential commodity super cycle. There's a lot of potential there. But in terms of physical assets, could be physical gold, could be physical silver. Heck, you can even have physical platinum if you want to. It's quite undervalued at the moment. You could always, if you're lucky enough to own your own home without a mortgage or whatever, that could play a big part in what you think. I think, as you mentioned earlier on as well, Charles, it could be what skills do you have? What intellectual intelligence do you have? What businesses do you currently have? I'm lucky enough to have a what we would call property business or real estate business with a business partner back in England. So we're lucky to have that in the background as well. They're the things that I think of, gold, silver, maybe platinum, mining stocks, maybe. If you own land or you own your own house, great. And then the skill sets. They're the things that I think of and go, well, that's what you could work on at the moment, because especially if there's financial system issues, then gold and silver normally come out the other side, pardon the pun, shining. Is there anything else from a self-reliance point of view that, again, you've written about this in your book as well? Is there anything else you would like to add to that in terms of what people could do to help themselves moving forward?
I think your move to Mexico is a good example, Robert, of one thing, which is to find some way to lower the cost of your living while maintaining a high quality of life. And of course, there's going to be trade-offs, but that lowering the cost of living is a huge plus because then you don't have to make so much money, right? It gives you more room to maneuver. And I think that I've been experimenting in my own life with the idea that you can maintain a very high quality of life, but reduce the cost. Um, and this includes like eating real food instead of packaged or ultra processed food, and even like if you own a house, you can always, if possible, you can take a roommate or help somebody out who's looking for affordable shelter. I mean, there's lots of ways. And so the ultimate to me, I think there's a quote from Charles Darwin, or it's attributed to him. It's something like, uh, success doesn't go to the strongest or even in our terms, the wealthiest. It goes to the most adaptable. So I think that's really the core asset that we're talking about here is adaptability, like keeping your eyes open and always having plan A, B, C and looking for opportunities. Because I'll just give a quick example. When Rome fell officially, everyone didn't just wither up and die. They simply moved. They found another way to live. And so, and it was different, but it wasn't necessarily worse. Who knows? I mean, everybody just adapted. And so, when we look at change coming on the ahead of us, we can say, well, things are going to change, but it doesn't have to be bad. If we can maintain a good quality of life, then let's go ahead and roll with it. So adaptability would be my core asset, if you will. And you go, well, that sounds kind of vague and stuff. And it's like, yeah, well, it's being open-minded, learning constantly, and being willing to be flexible. And I think those are the things that, like your move, kind of exemplifies. And I think that's how I would describe the core asset of going forward.
Well, I think that's a fantastic summary to be honest, Charles. I think there's a lot for people to take away. Hopefully, we've touched upon some subjects that people haven't thought about before, or at least can go away and either action or think about. We've spoken about Kessler events. We've spoken about financial systems, headwinds are happening, adaptability, values, and a lot of subjects today. Is there anything before we wrap up? Is there anything that we haven't spoken about yet that you think we should before we wrap up?
Well, that's tempting, um, Robert. But I think I guess I would just say like let's not lose. There's so much opinion out there, so much content that I think a core issue here is kind of sticking to the knitting. In other words, to avoid being distracted by just the sheer volume of content that we're exposed to now. So, and that's actually harder to do than it seems, but we need some self-discipline to kind of limit the fire hose of information and opinion out there. And so we have to kind of curate what we're absorbing here so we don't lose track simply by being overwhelmed.
I think that's a fantastic place to wrap up, Charles. In terms of people wanting to get in touch with you, I've got charleshughsmith.substack.com. I know that the Contrarian Capitalist already recommends that people go out and subscribe to yourself and follow your work. Obviously, self-reliance book as well. Any other places that people can get in touch with you, get a hold of you, follow your work?
Yeah, visit me at of2minds.com. That's my main site, my blog.
Fantastic. I'll put all those links into the show notes. So again, on Substack, just look at the text. You have all the links in there. Of course, if you're on YouTube, go to the description section and those links will be in there. Charles, it's been great to catch up and look forward to hopefully having round three later on in the year if that works for you.
Absolutely, Robert. Really appreciate the conversation. Thank you so much.